Good morning to all traders. Welcome to this Market Insights video provided to you by Orbex. Here. We're back after a long weekend here. It's Tuesday, it is 9th of June, and we're going to talk about FX measures. You probably all wonder what's going on with dollar yen. Why did the yen actually suddenly just surged? That includes the Swiss franc, but we're not going to analyze this on the day. So on the headlines, right, we've received some news regarding the US economy. The National Bureau of Economic Research announced that the US economy fell into recession in February, and that is now formal. That pushed the dollar down. At the same time, we've had some news that Trump is actually planning to sign a bill pressuring China over the Uighurs. And now this is a bill that actually passed the House of Representatives last month, calling for sanctions against the Chinese officials who repress the Muslim group in China's province. Now, of course, China is denying the mistreatment, and it says that the camps there provide vocational training. This is going to develop further, most likely into further tensions between US and China. Now, at the same time, don't forget that also in the emerging currencies, we've had the World Bank forecasting that they're going to shrink for the first time in 60 years. So that might be a very, very, very big dip on the emerging currencies there. We're talking about Mexican peso, the South African rand, as well as the Turkish lira, of course. So I want to go ahead and start with dollar yen first, and then we're going to have a quick look on the Aussie, the Kiwi, and okay, let's have a look at the dollar as well, because probably wonder whether it's going to head higher. Because this optimism and a weaker dollar, of course, seems to support the risk assets, risk-sensitive assets, let's just say. Now, at the same time, we've also got the demand for commodities increasing. That also supports risk assets more, like the Aussie and the Kiwi. And the fact that New Zealand is COVID-19 free. We had no cases in New Zealand yesterday. I think it was the first time. So, without further ado, dollar yen. It's not complicated. We were expecting this to be wave C, and we're expecting this to be 1, 2, 3, 4, and 5, right? Now, obviously, since we now crossed below the wave 1, right, over here, it means that most likely we're not going to get this being an impulse move to the upside. And that would suggest this is an ABC or W, X, and Y, and we're going to move back lower. We want to break below this trend line to start really considering sales, okay? Now, of course, the other scenario is that, and still, because we're still above this lower degree multi-structure to the upside, right, at 107.90, let's just say, let's call it 90, round it up. This is a very critical level that I'll be watching very closely for the day, because if we cross below that level, most likely the former scenario is going to take place. Otherwise, what else we can do here is we can call this a running flat, right? This is a running flat. So wave 1 would be here. We've got ABC, ABC, and some sort of an ending triangle over here. But it looks a little bit off, to be honest. So I'm not really sure whether this is going to be the case. However, in case we remain above the 109, we could still see prices moving higher. Now, in the short term, the RSI shows that there is more downside expected, okay? Now, let's go down to the Aussie. Well, the Aussie, as you all probably know, if you're watching our Market Insights video, we've called this move to the downside as an ending triangle. So this is a 5, and we're expecting now the cycle degree 4 to end, okay? We said we wouldn't want prices to cross above this trend line because it keeps it below the trend line. The long-term trend line equals that, is still bearish. So with this cross, it could be a false break, right? We could still get this wave 4 over here acting as a double top and then start moving lower, okay? Which means this is a W, X, and Y indeed. And we had this ending around the 161 Fibonacci extension, this last move to the upside, and this is an ending triangle because it really looks corrective as well. If we don't see prices returning back below this trend line, then most likely we're going to see prices moving higher, and that would suggest this is wave 5 over here as well. So we ended, and this is a reversal. Then we will probably look at this with a leading triangle view, A, B, sorry, 1, 2, and then obviously this is wave 3, okay? Now, of course, there's chances that we cross back below the trend line, but then they'll move back up. So I would actually assume that the 68.70 zone is very, very, very critical for the longer term. Kiwi, well, a similar situation. We are here at exactly at wave 1, right? And that still makes us an impulse, or it could be an ending triangle. Well, this is what I expect to be, actually. So ABC over here ended at the 100 Fibonacci extension as well. This is the A, this is the B, and this is the C at 1065.72. We've had a fresh high, obviously. We didn't penetrate wave 1, and that still maintains the this outlook bearish, okay? And we also have the RSI signal. In case, of course, we break again above this level, then the chances of moving down would be weakening, will be lessened, and then we're probably looking at next stop at 77.55. Okay, and last, let's have a quick look on euro dollar, because I know most of you are wondering what's really happening with that. I'll be honest, I'm not sure what's going to happen in the short term. I am still supporting the view I have been supporting for a while now. This is W, X, and Y. It seems that we've gone to an area below the 114 level, and that suggests two things. Either it was a first attempt, so we're going to see prices moving up, and that would be wave 5, and then we should start looking for prices to move lower. Or number 2, right? This zone is it's a critical zone. We are missing the 114. Okay, so there won't be a second attempt. It was just a weak attempt, and we're going to start seeing prices now moving to the downside. Right now, the first target to the downside, it could be the 110. Okay, because it looks corrective. It looks, when we look at it, when the second scenario, it looks impulsive with a multi-structure move to the upside when we look at the former scenario. But either case, in the short term, most likely we're going to remain in this area around here in consolidation, because we are expecting the FOMC tomorrow, Fed's interest rate decision, for further close. So I'm not really sure we're going to see markets moving as much today. Okay, so until then, trade safe, and I will see you again tomorrow.